Good afternoon and welcome to GrainTV. It's March 1st, 2013. I'm Logan Burgess. To my right here is Cody Bills. Well, Cody, let's jump into Fire Tip, see how the grains traded on this Friday. As you can see, we had May corn up 5 cents. Soybeans backing off 7 1/4. We had Chicago wheat up 6 cents. Kansas City wheat moving up 3 3/4. If you guys want to get live quotes over at your home or office, visit us at grainhedge.com. You can take a no-obligation demo of the platform that you see here on GrainTV. But Cody, in particular, looking at corn today, we did see corn really continue to pick up some steam here. $7 acted as support in today's action. What was kind of your take on this market here?
Yeah, well, I think it's once again continuation from this snapback. A lot of it had to do with bargain buying. As we were down, we had some good, strong export sales. And so that's one of the reasons. But I think that next week we got to be looking ahead here and seeing what's in the price landscape here next week. And I think next week we got this 200-day moving average in this May contract. That's around 712. Again, we have a previous low which should act as a resistance level right around 716 here. Those two lines, those two resistance levels, I think will be converging early on next week, and I wouldn't be surprised if we get around them to see that act as some resistance. So maybe use that price level as a possibility to maybe trigger some hedges, but I would be thinking about some ways to get some grain price here because I am a little bit concerned about whether or not corn or soybeans or all of these grains will be able to continue rallying multiple weeks in a row.
Yeah, I think the same situation is kind of playing out in soybeans right now. If you'd switch over here to the May daily candlestick chart, as you can see here, we're kind of in the middle of the range that we've been trading really since about October. The top side of that range being around $15 per bushel. And just within the last week or two here, we had a hard time getting up there. We really tested it one day. We actually hit our head on 15 and sold off quite rapidly. So looking at this chart right now, a similar area, as you were talking about with corn, an area where I think it might not be a bad idea to look at pricing some old crop grain, if you're still looking to move some bushels, would be the 1470 to 1472 area. That was the last high here that we saw back in the last week and a half. And fundamentally, it seems like similar to corn, soybeans is going to have a harder time really making a good push here higher.
Yeah, well, I think there are certain circumstances where we could see soybeans move above that $15 mark again.
Yeah.
Maybe you could outline those circumstances and maybe let me know, do you think that those are probable?
Right. I think the two that come to mind is dealing with South America right now. We're looking at the May contract here. This is going to be going off the board in May. So really it's going to be South American production that's going to be driving the value of this contract here in the U.S. And two issues that come to mind logistically. Certainly this is the time of year when South America does, strikes at port start to put a little bit of a bid in our market. But for the most part, we're expecting these strikes. They will be coming in unless something major happens. I don't think that's going to be bullish enough to really push this bean market another leg higher. Obviously, production decreases could push things higher as well. I know just this week we had a story out from Argentina that their projected soy crop is smaller than what it's expected. It is smaller than what the USDA has currently factored in. But the bottom line is that we're still going to have a huge quantity of soybeans coming out of South America from Brazil and Argentina. And as I said, I don't think it's going to be able to push it above $15. We've been trading and really testing this level 3 times. So at this point, I'd look for that to stay intact.
Yeah, that sounds fair enough. One of the things that we could do here is switch over to the cash market, and we're going to do that right now. Soybeans, across the cash market landscape, we actually had a decline in basis across the U.S. We actually saw, on average, the U.S. basis for soybeans decline 5 cents and also 5 cents for corn as well. One of the things, there's really 2 reasons why that happened. One, we had a nice rally this week, and when you have a nice rally, you get producers more willing to sell as prices move up. And you can kind of back off that basis. You don't necessarily have to pay as much basis-wise for the grain. The other thing is that we did have that roll into the May contract, and that contract it was significantly discounted to the March contract. It was discounted about 16 cents on the close yesterday. So the bottom line here is you're basically pegging your cash bid off of a less valuable contract,
right.
and that's one of the reasons we saw people start moving, start rolling into that May contract, and that's
right.
one of the reasons we saw basis depressed.
Right. You know, here at Grain Hedge, guys, we do have a large quantity of cash market data, and actually here in the most recent edition of Feed and Grain Magazine, Cody, you were featured basically an article looking at kind of the changes in the cash market within the last 6 months, and in particular, kind of the situation with regards to the Mississippi River, low water levels, barge issues that we saw there. And I know I was looking through the article here a little bit. In particular, you had one chart that compared U.S. cash prices of corn against the July 13 contract, kind of in the context of how inverted this market is. I guess, has the situation changed right now? And in general, farmers looking at pricing on a basis contract, possibly, what should they be thinking about?
Yeah, that's a good question, Logan. And let's just take a quick look here at the average U.S. basis calculated off the July contract. The chart that I use in Feed and Grain, it really only went up to January. So that's right about this time of the year. So we really didn't get this huge spike here
right.
that we have observed in the last month in basis. And what this is showing us really is the inversion in the futures market. I'm calculating basis off the July futures. So as we had the front month move at such a premium to the July contract, we started seeing basis really start ripping relative to the July contract as well.
Right.
What this is telling me and what triggered this is really that January report, the January WASDE report, the stocks report, that started moving these spreads significantly. Mm-hmm. And when you look at that, as we started to inverse, one of the things I'd mentioned in the articles was it just doesn't make sense to be holding grain physically as we start to inverse. So you're going to be kind of swimming upstream. It's going to be difficult next month. It's going to be difficult to pay for the cost of carry and to get that basis appreciation that you're looking for. And I think what we're seeing here is really kind of a spike, most likely going to be a top, I would believe, somewhere around this level because now we're going to be rolling into that May contract. That May contract is more in line, closer to July, and I think it's going to start pulling us back down again, and you're going to see the blue line move more toward the red line here now.
Right, absolutely. Well, if you guys have any questions about cash pricing decisions here, maybe looking at basis more in depth in your local cash market, you can always give us a call here at the office, kind of pick Cody's brain on that topic here. Our number is 877-472-4607. One more thing to note here. Yesterday we did talk about the CME Group making plans to announce revised trading hours. Today they have pushed that back. No new announcement on that front today. As we said yesterday, all expectations are for grain hours to be scaled back. We'll keep you posted on that front here on GrainTV. But in general, Cody, I think that kind of wraps up what we saw in the grain market here this week. Thanks a lot for joining us here, guys, on a Friday. Have a great weekend. We'll see you on Monday.